Hello and welcome to Ticker Tapes. Today we're taking a look at the world through the eyes of the ETF market. Now, markets bounced back over the last week with the Dow, S&P 500, and both the Nasdaq Composite and 100 indices posting decent weekly gains. Of course, the markets still face several key challenges. Firstly, the ongoing conflict in Ukraine, though there is a sense that current peace talks may bear some fruit. The threat of further inflation looms large, as does the possibility of additional supply chain interruptions as China locks down key cities as part of its zero tolerance for COVID policy. Against this backdrop, the ETF market looks to be holding its own as it celebrates its 35th birthday. ETF inflows in the U.S. during February reached $80 billion, and as of March 11th, year-to-date flows were a little over $99 billion, the second highest total ever after the $153.95 billion gathered over the same period in 2012. If we look back over a 12-month period, inflows into U.S.-listed ETFs total $864.87 billion, and we have seen 30 months of consecutive net inflows to boot. That said, total assets under management have declined by 5.1% year-to-date thanks to the sell-off in risk assets. The S&P 500 index is down by almost 11% year-to-date, for example. We can see the long-term growth profile of U.S. ETF assets in this chart that dates back to 2006. ETF investors seem to have viewed the sell-off in stocks this year as a buying opportunity, with the majority of new inflows being allocated to equity-related ETFs. As far as weekly flows and movers are concerned, small and mid-cap equities were in vogue, with the iShares Russell 2000 ETF seeing more than $2.33 billion of inflows. Year-to-date, IWM is down by almost 12%, but encouragingly, it is 4.82% above its 52-week lows and was up by 0.51% over the last week. Money has also gone into a relative strength or momentum-based strategy pursued by the First Trust Dorsey Wright Focus 5 ETF, which, at any one time, holds the 5 ETFs within the First Trust stable of U.S. sectors ETFs that exhibit the strongest relative strength. Holdings in the Dorsey Wright Focus 5 ETF are reevaluated on a twice-monthly basis. This unique approach has obviously chimed with money managers and ETF investors who pumped $1.18 billion into the fund last week. ETFs that track the price of carbon emissions were among the best performers last week. The KFA Global Carbon ETF was up 14.7% over the last 5 trading days. We first flagged the carbon-linked ETF alongside its rival GRN back in early February after a 6% weekly gain for KRBN. Meanwhile, GRN added 14.13% last week. However, GRN is an ETN and not an ETF. ETNs can be thought of as listed structured products, and as such, they are specialist investments that carry a high degree of risk and therefore unlikely to be suitable for many retail investors.